Good morning, everyone. Today is November 5th. This is Brad Matheny, and boy, what an incredible move in gold. I'm looking at a gold chart here on TradingView, and I want to highlight a couple of things. First off, the fact that we've moved into broad cycle phases. Let me find the cycle trend here. I think this is it. And what I want you to understand is that we moved into a cycle trend about 9.5 years, and we ended in 2019, December 2019. So about 9.5 years prior to that would put us at around 2010, and 9.5 years prior to that would put us around 2000, 2001. So what I'm going to do is I'm going to mark it here, and I'm going to try to highlight 2010 and see where we're at. So it should be right around September, October, November. And I'm going to try to make these nice and thick. Let's see here, 4 point, and we'll leave them there. And so now what we have here, ladies and gentlemen, is we have the end of the major trend. It's actually a little too long here, so I'm going to shrink it back down. Should be, yep, December 19th. Okay, so what we have here in this chart is we have a cycle trend here where this is a depreciation cycle phase, then an appreciation cycle phase. So what I'm going to do is I'm going to highlight these with downward arrows. This is a depreciation cycle phase. Right side, down arrow, red. And this is an appreciation cycle phase. So I'll do this next one here. This is a depreciationary cycle phase. And this is an appreciation cycle phase. An appreciation cycle phase means that prices in the global markets generally will appreciate or move higher. And that's one of the primary differences that is driving global cycle trends right now. This next cycle phase here ends around 2029, right over here. So this extended depreciation cycle phase is going to take place for quite a while. But before we get to that, let's focus on what I really want to show you is that in a depreciationary cycle phase, because remember, this was an appreciation cycle phase, and that lasted from roughly 1992 through 2001. And you can see here what happened with gold from roughly 1992 to 2001, roughly. What happened to gold? Gold moved downward. Okay, in appreciation cycle phases, the focus is on global stocks and expansion of credit and the rallying taking place in whatever the hot sectors are. In a depreciation cycle phase, what happens is we see a bit of turmoil, we see rotation, we see volatility, and we eventually see gold and silver begin to moderately melt upward as fear starts to hit in the market. Then we come up to some kind of a global crisis event like we had right here. This was the 2008-9 global financial crisis. And then we get this big blow off peak. So even though we had this period right here, which was the global financial crisis here, and I'll change that to a bright pinkish red color. Let's see here. And we had the 2000 crisis, which was over here, and that is the dot-com bubble burst and the terrorist attacks, 9/11. So we have these two big cycle phases, and understand this was the end of an appreciation cycle phase. It blew off the markets. Gold collapsed, as you can see here, during this downward trend. And then we shifted into a deflationary or depreciation cycle phase. And we saw this recovery phase in gold while the stock market moved up. What happened at this point? The dollar moved down, US stocks moved higher, and gold moved higher. And this is because we have a scenario where the Fed kept printing money and driving equity into the markets. Now we have a scenario where gold, and it's very cluttered here, but gold has bottomed down over here. It's up near these upper levels, had a big move on Friday. We're in the midst of a deflationary cycle phase, and what's likely going to happen is gold has, just like we saw back over here in a transitionary phase. COVID hit right after the end of the appreciation cycle phase ended, and the beginning of the depreciation cycle phase took place. COVID disrupted the markets with extended central bank policy, and that has now unwound. I believe it is completely unwound, and the markets are now starting to react to global fear. And what that means is that, in my opinion, we are somewhere kind of like right over in here, 2004, maybe 2003, or maybe even a little later, 2005, back over here. So now take a look. If my analysis is correct, and we're looking at gold in a scenario where we are in this 2003 basing phase here, or potentially into this type of mode where we've based out, and or 2004, which would be, I've highlighted this area, 2002, 2003, and or this area, 2005, kind of right in here before we start to take off. Well, then understand that from these levels, take a look here, we really start to see a very big appreciation in gold over the next 8+ years. So if we go from here, say 2000, the 2001 phase bottom, up to the high here, we're talking 600% move in gold. If we go from the 2003 basing right here, and we start to see this melt up, we're talking a 522% move in gold. If we are talking back over here, this 2005 basing, before we start to get a big rally, you're talking a potential 354% rally in gold. So understand that we're getting, when we get over here to this timeline where we're looking at the current gold chart, and I know I have a lot of crud on here, but understand that we've seen this momentum melt up rally. We've seen this basing across this blue line right here. This basing is held up. Now we've seen a big spike in volume. Short sellers are pulling away. Silver rallied up huge. Gold rallied up huge. It's confirming that the markets do not want to move lower, and the melt up bias is continuing to the upside. Understand that if we are in that area where gold could move potentially 300 to 500% higher, understand that we're looking at a move potentially up into, oh man, I can't even get there. No, let's just do this, shrink it back down, come back here. So at 350%, we would be talking 6,100 gold, it looks like. Oops, sorry, $7,500 gold. So understand that we would be looking at $7,700, $7,800 gold at this level. At a 500% increase, we'd be looking at 10,000 gold, and at a 640% increase, which is where we were initially, we'd be potentially looking at $12,000 gold. If my assumption is correct that we're moving into this longer term cycle, and remember that goes all the way out through this cycle pattern, through this 2029 end of the depreciationary cycle phase, and potentially a little bit further. So understand it could move all the way out into 30, 31, peak out kind of like we did before. It could be a very big unwinding phase. That's why I've been telling you that the next, basically 20 years, 25 years are incredible. I had a talk with a friend of mine the other day in Colorado, and he's really big into different types of investments and real estate and what have you. But understand that, I'm a bit older. I'm not going to tell you my age here, but let's just say I might not be around in 20 years. But the reality is, the next 20 to 40 years, if you're in your 20s, teens, 20s, or 30s, I'm telling you, you have the biggest and best opportunities to create wealth over the next 20 some years and pass 30 years and pass that on to your kids because the moves in the market are going to be incredible. And gold is setting up an incredibly volatile pattern, but it's huge if you think about it. So now let's come back over here, try to highlight what I really wanted to show you in this, which is this basing bottoming pattern. So we're just going to take a look. Oops, do that all the time when I click on things. So let's take a look here at gold. We had this big rally on Friday. So here's Friday, big rally, big green bar, big breakout, took out this previous high right over here. Really, really a big momentum. And we had a big momentum move here, and then it came back down and rolled downward. So in reality, ladies and gentlemen, we need to see gold continue this move. We need to see it take out this high, and I'll get rid of it as an arrow and make it a normal and blue. And okay, and then we need to see it take out this high. And the reality, ladies and gentlemen, is that gold must continue to move higher. It must continue to accelerate upward, taking out these highs in order to confirm this base and bottom is set up. So this is a very early stage, but we've got very, very strong volume, a big, big breakout. It's almost as if the sellers just gave up today, Friday, and got out of their positions knowing that something massive is about to take place. But what was really interesting is when we come back and take a look at historically where these types of patterns have occurred, look at, we had a big basing mode here in gold in October 2021, which prompted a very big move. You can see it prompted a very big uptrend here from roughly 1751 up to 2100. But it prompted a very big double bottom formation. We had this breakdown low, but a double bottom off of this support, and then prompted a big volume move up off a unique bottom, and really prompted an upside move here. Now granted, understand this is a 35% upside move, a big volume. You can see the accumulating volume right here. Spread it out here. You can see the accumulating volume across here prompted a nice big move in gold. You can see, and these have happened perpetually. Accumulating volume here prompted a very big run up in gold in 2020. So you can see here after the COVID rotation, a very big pop in volume here prompted a recovery phase. Here's a big accumulation of volume. Sellers were getting out of the market, buyers were dominating, and it prompted a very big move from basically 1450 up to this level pre-COVID 1700. That's again about a 22% move in gold. So you can see that we've had these cycles repetitively. Here's another one. Big accumulation, markets were moving down, sellers were in control, and then all of a sudden we get this shift. Sellers just give up, buyers dive in and start driving market up. And at this point, look at this, from these lows here all the way up to these levels, it's a 22.6% rally. Here's another example. Okay, market's moving down, moving down. This is 2018. We get a decent buy phase. Look at the sellers just getting out on this bar right here. Yeah, that big green bar. And then what happens? We get a little bit of rotation, but the melt up is stupendous. It goes from here up to here, and that's a 13% move. So understand that where we're at with this move in gold right now, try to get it back here, we could see a 13 to 30% move from these lows. And if we come up here, 13% would put us at 1860, 1870, which I believe is really critical resistance. Got to get above 1870 to see any type of an upward move. But if we were to see a 30% upside move in gold right now, we would be looking at 20, let's call it 2150, 2170, and that would be a stupendous move. I believe it would be new all-time highs. I'm pretty damn sure of it. Yes, it would be. And that would send the precious metals markets into a new long-term bullish trend. Now, silver, let's take a look at silver real quick. Silver had a huge move again on Friday. It was an incredible move. I mean, you don't see bars like this often with huge volume. But again, silver has got a lot of resistance. So I'm going to come over here. I'm going to spread this out. Oop, get rid of that. And you've got to see here, we've got a lot of resistance really right across these areas here, right where we closed. And then we've got to get above this level here to make any type of upward trending. And then, of course, we have this historical resistance area right back up here and here. And long and short of it, ladies and gentlemen, silver's got some work to do. Now, I still love silver. If you're a member, you understand that I have been hedging. I've been actively advising you to hedge positions in metals, telling you that it's a great time to get into metals. Don't worry about the downtrend. The strength in the dollar will weaken and the markets will shift. And it's primarily because of the fact that we're in this depreciationary price cycle. Remember, what I do in my analysis is I study cycles and I tell you what's going on the longer term basis. We still have 7.5 years, maybe longer, of a depreciationary cycle phase, and that's gonna drive trending. We're in the initial transition phase from appreciationary cycle to depreciationary cycle, which everybody tends to lose track. They're too focused on these daily charts and weekly charts. They don't understand that for the next 7, 8, 8.5, maybe 9 years, we're going to see gold and silver continue to skyrocket, potentially moving dramatically higher because, and I'm going to show this to you, the last massive depreciationary cycle phase took place from roughly 2001 to 2010, roughly right in here, and then ended December 19th. I gotta move it over a little bit. December 2019, close enough. So understand that this was our last appreciationary cycle phase right here. Then we went into a depreciation cycle phase. Sorry, this was the depreciation cycle phase. I got it backwards. This was the appreciation cycle phase. And this is the depreciation cycle phase that we're in right now. Now, in the depreciation cycle phase, what should happen is the dollar will reach a peak and then begin to weaken. Oil will reach a peak and then begin to weaken. It's a transitional phase where the end of this cycle, the appreciation cycle, drives traders into stocks, technology, foreign assets, companies and foreign central banks and governments and cities, states take on a lot of debt. They basically ramp themselves up, just like back over here in the dot-com bubble. We had the same thing back over here. This time it's global, US and global. And now we're in this unwinding phase, which we have taken care of and kind of, I would assume we're 60, 70, 80% through some of the unwinding of that, but we still have the debt issue to take care of and the establishment of a new base function. In a depreciation cycle phase, as you're aware, depending on what the central banks do and what traders do, we can have gold and silver moving higher while we have the stock market moving higher. So if I add the SPY, move it down to a new pane, move to new pane below, set this up as blue. So you can see here that during this depreciation cycle phase, what happened to the SPY? We peaked here in 2000, we rolled downward, rolled around, finally hit a bottom, and then we started to kind of base right here. This is where the cycle phase ended. And now, in the end of the depreciation cycle phase, now we start an appreciation cycle phase. At the end of the appreciation, the beginning of the appreciation cycle phase, you can see that gold and silver reached a peak. And what this was the end result of the blow off super cycle phase where gold and silver reached an extreme peak. The markets finally kind of washed out that last bit of information, and then in the appreciation phase actually began to accumulate. The appreciation phase ended right here in 2019, just before COVID. COVID hit, central banks went to the rescue, and they pushed this trending into on the SPY and the global markets into almost like a hyperdrive. Think of it like everybody just bought into the ether, bought into the great trending, and what happened with gold and silver? They did what they're supposed to do. They reacted to the end of the cycle phase, moving higher. But then once we reached into that late 2020, 2021 type time frame, everyone was like, wait a minute, we're not in this phase. This is not what's normally happening. So gold and silver have been moving back downward as the strength in the US dollar and the global markets weaken, and they've been basically searching for a base. They're back into these areas here where you can see we have a basing area kind of pre-COVID right in this area. So if I were to consider it a basing area, I would say actually kind of like this. This is the basing area, gold and silver, pre-COVID highs, recent lows, and we can go all the way back here, the 2007, 8, 10 basing level before the big breakout. So we've been in this breakout phase. We've been below it back over here. Now we need to see this scenario hold up, and where we're at with this is probably the next resistance area in silver and gold is going to be back in this area. And I would say that we need to see gold and silver rally above this. Let me get this into regular pricing. So silver needs to get above 25, 26.50 in that area before it's going to attempt to accelerate. And again, remember the basing bottoming formation of the previous deflationary or depreciationary cycle phase represented 1,000, almost 1,100 point rally in gold. And just for the fun of it, yeah, I know, I love to do this because, you know, if it happened again from this basing area, 1,000, 1,100 point rally would put gold or silver up in the $225 an ounce area, maybe higher. So this cycle phase, though, is very, very important. And this I want you to understand is this cycle phase, these appreciation, depreciation cycle phases, this was depreciation, this was appreciation, so this is red and this is red. These are part of a broader cycle panel that lasts around 85, 90 years, or approximately 187 years on average. This is a very big unwinding cycle here. These last two to three appreciation, depreciation cycle phase puts us into a scenario here with the SPY. It's very hard to explain because I can't get the data to show you, but we move into a very broad scale. We move into a very broad scale crisis catastrophe. And whoop, I didn't want that. Let me see if I can get rid of this. Okay. We move into kind of a broad scale crisis catastrophe when we get into this mode. So my thinking is, and I will tell you this as we move forward, my thinking is, and this is what I've been telling you for a long, long time, that we're in a wave 3 rally and we've come up to a wave 3 peak right up here. We're setting up a wave 4 base, which may go a bit lower, but I really believe that this is the base setting up right now. I think we've seen enough unwinding that we may start a kind of an upward trending here, maybe get to nominal new highs, form some sort of a sideways base, move up, some sort of a sideways base, move up, and eventually roll into that end of year crisis to 2029, 2030, 2031 end of year crisis, which may put us in some sort of a crisis mode like this and may prompt a very big crisis phase where we try to hammer out some sort of a bottom. And this could last 9 years before, because remember, we're in a depreciationary phase in a depreciationary phase, we can still have the market move up, right? So look, you don't believe me? I know you do believe me, but we can still have the market move up. We had a depreciation cycle phase here. It peaked back over here, but we had a lot of great recovery here. Then we had the 2008-9 crisis, and then we entered into a broad cycle phase to the upside. We can have an upward price move here in the US stock market while we're in a depreciationary cycle phase. But understand that the peak in gold and silver right over here is going to coordinate with some sort of a major event. Now, whether that event happens somewhere over here and we roll down in this area prior to the 2029 to 31 end of cycle phase, or whether it happens near the 2029 to 31 end of cycle phase, what I believe is going to happen is we're going to enter into a new unwinding phase, which may last until 20 out here. They don't even have it, so I got to do the math. 2030 plus 9, 2040, 2041. And then we will likely, at this point, somewhere in here, set up some sort of a base, some sort of an area where we can reestablish a new upward move. Now you can see here I've drawn this all the way down to 0. This is unrealistic. We're not going to see 0 in the SPY. What we're really going to see is, if you take a look at this rotation and you understand that the real support level starts around this 2015. So I'm just going to draw it from roughly here to COVID areas, and that's really the support level. Okay, so when you look at it, we're likely, depending on how high we get, we may not get way up here to 10,000 on the SPY. We may get, you know, something a little more contrite. And remember, I'm just kind of drawing. We may get something a little more contented or consolidated, kind of like this, and then maybe some sort of a top or some sort of a rollover, and then some sort of a basing. But I want you to understand this. What would take the world to collapse would be massive war, thermonuclear war, a huge depopulation of the planet. That type of thing would wipe out the economy. When you go into a scenario where currencies fail or governments fail or valuations fail, what ends up happening is something else. Gold, silver, Bitcoin, whatever becomes the new store of value, but the economy still functions. People still need food. People still need whatever. So there'll just be some new form of wealth, new asset. Gold backed whatever, oil backed whatever, Bitcoin backed whatever. The economy won't fail. It may unravel a bit as valuations resettle, but eventually something else will become the new form of currency. And this has happened repetitively, like 11 or 12 times in China and Rome and throughout the Byzantine Empire. So understand that this is not something that's, you know, unheard of. It's happened over and over again over the last 6, 7, 8,000 years. And when, pardon my language, the crap hits the fan and nobody believes that, you know, the Roman coins or the Roman Empire is worth anything, what did they do? They went back to bartering gold and silver and copper and agricultural products and whatever. And that's really what, you know, you have to be aware of. We may end up in some kind of a reset function out here in 2029, 30, 31, 35, somewhere in that area. But we've still got 9, 10, 11, 12 years to get there. The doom and gloomers are really, you know, they're predicting that this depreciationary cycle phase could be the end of the capital market system. And I don't see that happening. I see it continuing onward until roughly 2033, 34, 37. Then we may have some sort of a crisis reset event. But we'll see. But okay, so enough with, I've been all over the place, but I need to keep you informed. Long and short of it, gold and silver are just prepped for a massive move. And I'm glad I've been able to stick with this for you. I know that you've been probably like doubting me, but here we go. If we get some sort of confirmation over the next couple of months with gold and silver just moving higher and breaking the resistance areas, then we are going to see, let me show you again here. We need to see gold and silver move up above these historic resistance areas, these previous price peaks. We need to see it base. We need to see it start to move upward, like silver up in the $23 to $24 area would be a very solid confirmation of an upside move. All right, I'm going to go back to the other videos. This is super exciting, ladies and gentlemen, because it's exactly what I have been predicting all the way back here in 2015, 14, 13. I've been telling everyone these cycles are coming. This big cycle trend is happening. What I did not prepare for was this rotation with COVID. This kind of set everything off. What would have happened had we not had COVID? We would have had a bit of a melt up like this, and eventually would have taken off just like 2002 through 2005 in gold. So we've had this rotation. It's kind of blown off these cycles. We've had this big wide rotation. What it's done is it's rolled over, normalized, and now we have kind of a middle channel right in here that is where we are looking to get back above. We need to get kind of back above this standard deviation channel right over here and begin to move our melt up higher. Eventually, as I mentioned to you, gold and silver will move into a parabolic trend, and that's going to be probably 2 or 3, maybe 4 years from now. All right, guys, off to the next video. Follow me on Twitter, follow me on YouTube. It's going to be super exciting over the next 7 years.